Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Talmaya.
And I'm Tanveer Gill. The markets were pretty much in a range in the session today, but what was important was what happened to the currency touching 63. So, some more downward bias seems ahead of the FOMC policy meet.
Let's take a look at the show lineup, and the guest who would be joining us on the show today. We've got P Phani Sekhar to give us a spin on the fundamental side of the market and to talk about technicals. We've got Ashwini Gujral of ashwinigujral.com. We also will get your voice from Hugh Keener of Swiss Asia Capital on what broadly markets are expecting, or global money managers expecting from this week's important FOMC event, and good old Samir Arora with his spin on what he makes of valuations. But before I start our panel discussion, here's a look at the final tally. The Nifty clearly is unpredictable, 86.33 for the better part of the day. We moved in and out of red, even though the news flow has been on a side. If I look at not only equities but all major markets, which is the currency market, the bond market, clearly there is some degree of risk aversion which has kicked in. It's nothing to do with global factors, but in general, I think markets are in a consolidation mode. Some stocks which were in news today, you got DLF, then you had Kane India, where the bad news flow, the poor news flow continues. The uptrend in IT was clearly visible at HCL Tech and Infosys. They both traded in the green. And then Idea, Suzlon and Unitech were some of the prominent counters when it comes to National Stock Exchange.
Oh yes, indeed. There was, of course, a fair amount of excitement in mid-tier pharma names. In fact, across the board, Dushman Pharma, Wockhardt, Suven Life Sciences, which was a breakout trade, really above average volumes. And a very, very meteoric rise there, 19% up, 296, really the stock of the session. There's Natco Pharma closing at 52-week high. So there has been a lot of concentration in mid-tier pharmaceutical names. And day after day, it just seems like buying doesn't stop or abate for some of these names. There is growing interest. Natco Pharma, of course, after yesterday's last week's stupendous rally, stepped back a bit in the session, but trading at record highs for this one as well. So let's go across to our guests and get a quick sense of what they make of the market session and what they expect of tomorrow's trading day. Ashwini, I'll start off with you. Technically first, so where do you think the market is headed?
So it remains in a correction, and chances are it will remain in one till we get a trigger on the upside, because consistently we've seen that intraday rallies are getting sold into. Possibly we could test this 85-8600 zone, which is the intervening space between the 50 and the 100-day moving average, from where generally markets have turned. So maybe a very brave trader would put a 8500 type of stop and try to go long. But the best way of going long in any market is to buy into it once the upside trigger happens. But overall, next couple of days are likely to remain sideways.
Funny, globally things are not all that poor. Locally, news flow has been constructive. Inflation is on our side. Advanced tax numbers which were released today, they are quite encouraging, and a couple of key bills have sailed through easily on the floor of the parliament. So if news flow is not bad, why is market behavior so sticky and so poor?
Good evening, Nikunj. Well, I would qualify news flow to be mixed and not certainly good or bad. So if you look at, say, global factors, there is certainly concern, although might be a little overdone, that Fed might raise interest rates, although I don't see any reason or any particular conditions ripe for interest rate rise in the US. Locally, if you see, inflation is touching the outer end of 6%, which probably will ensure that Reserve Bank might not move for the next 3 to 4 months as far as interest rates are concerned. That is something that's a little bit disconcerting for the market. And on the legislative side, although we saw a smooth passage of FDI and insurance, but the same can't be said about, say, a land bill or a mining bill. And it is possible that the land bill might not see the light of the day before the monsoon session of Parliament, which means that half of the next financial year will be gone. So I think a combination of these factors are capping the market movement above 9,000. And what you are seeing is repeatedly at those highs, you continue to see profit booking in all the high beta sectors and in sectors such as financial services where profits were made pretty quickly and handsomely. And to that extent, I guess this kind of consolidation might carry on for a little bit more, since at levels closer to 8,600, you also have some serious long-term money coming into the market. So it's not such a bad market for a long-term investor, but yeah, in the very near term, there is some pressure.
Okay, that's a broad view on the market, but let's drill it down to specific names. And I'll start off with DLF, which was a star performer in the session today. Of course, the deferment of the CCPS conversion till March 2016 has also brought about some relief, which is why the stock ended higher, 7% up. That would be a cumulative, I think, 12 to 14% move over the last two sessions. Almost 1.5 crore shares traded there. Ashwini, what's the call technically for this one?
See, it appears that the downside is over and now some sort of an upswing should carry on in DLF. We'll possibly see 185, 190 here. So 150, 155 is now a good stop.
Phani, do you think DLF is finally out of the woods? They can go out and raise capital. UBS feels that now that the coupon rate on the convertible shares has gone down, that will have an impact on cash flows. Net-net, do you think DLF could be a good contra bet?
Well, strictly from the kind of issues that they were facing, they seem to be out of woods, at least until SEBI decides to appeal in a higher court of law, which I am not aware of. Broadly, from a sector point of view, while there is some relief to DLF on capital raising, etc., but from a sector point of view, it will be out of woods, and so will be many other real estate stocks. When you actually see the economy consistently moving above 8.5%. The unique challenge for a company like DLF is still its predominant presence in the NCR region, where the inventory levels are still close to 70 months or so. And that is something that doesn't give you a lot of confidence. So what might happen is there is relief in terms of capital raising. So it might be some kind of a breather. But if you are thinking of buying this stock for growth, that might not come very easily. So there might be another 10 to 15% gains simply because it can raise capital, and to that extent there are near-term concerns have been alleviated. But if you are taking a 2-year view, you still don't have any clarity on where the growth is going to come from.
However, for now, there seems to be some relief for the stock as it moves higher, 4% up in the session today. A good move really for DLF. Aside of that, there were some of the companies in focus on the back of advanced tax numbers. I remember SBI coming out with what seemed like a fairly impressive number on advanced tax, HDFC as well, and Yes Bank too. Phani, a quick word on what you'll be watching out for among the quarterly earnings and how do the financials stack up?
Well, financials are still your best bet in this market because the structural story of the market still remains intact. So while financials might see some profit booking on the back of concerns of higher interest rates in US or the legislative agenda delaying the India growth story, but this has to be one of the best opportunities to accumulate them because they are the proxy on the economic turnaround. So private banks and NBFCs in the housing and the vehicle finance space top my buying list. So larger private banks followed by NBFCs and followed by smaller private banks is something that you can look at. Even large public sector banks are also looking interesting, but mid-cap PSU banks are something that you still have to be wary about because the asset quality concerns still remain out there.
Ashwini, it's all about mid-cap pharmaceutical. Last week it was Natco Pharma, today it was Aurobindo, Suven and Wockhardt. What is the deal with mid-cap pharma, and do you think mid-cap pharma stocks still have a long way to go, or this is as good as it gets?
See, there's always a bull market somewhere in the market. So even in a market that is correcting, certain stocks are picking up, and the reason is that large cap pharma has had such a big run over many years that now mid-cap is just trying to catch up. But people have to be careful because if you get into a stock that's up, 250% like Spark, then chances are buying into a consolidation and one that will really test your patience. So while other stocks are also coming up like stuff like Dishman Pharma or today Suven and maybe some of the others. But don't get into things which have already had a large run-up, because slowly the stocks will start getting into consolidation and other stocks will perform. So just getting into a pharma stock may not pay off as much.
Thanks for that, Ashwini. Stay on with us. We'll head into a break right now. But as we do so, hear out Jörg Keener of Swiss Asia Capital spoke to ET Now on the outcome of the FOMC meet and its impact on the markets. According to him, U.S. growth is not strong enough to see massive interest rate hikes, something that the Fed has endorsed all this while. However, he foresees capital inflows into the Indian markets.
If the Fed really wants to increase interest rates and tighten and have a really very tightest view, I think we're going to have more trouble in the global economies and the markets to come. I don't see that the Fed is really going to increase interest rates. There's been a lot of talk, but not very much action. And on the back of this talk, we had an incredible dollar strength as everybody else has been basically running into QE. So we had this year, close to 20 interest rate cuts around the globe where everybody tries to compete. I think, if you've seen with the new leadership in India and the opening up of the economy, you see actually more money flowing in from the region and globally into India, and that's basically showing you that you have a stronger currency. Now, what we've seen as well is current account improvements, and it's to a large extent the domestic market, and we see interest rates coming down even further, and that's a real stimulation on the end, probably even for more investments into the economy. Some of it might be volume investment, but in general, I believe that the structure is relatively positive. The economy is under-leveraged compared with many other economies around the world.
Defending 8,600 on the Nifty. What is it that we'll be watching out for tomorrow, Nikhil?
The FOMC meeting starts on 17th. The outcome comes out on 18th night, which means Thursday morning Asia and our markets would react. So it's pointless to really get into any specific subject or a topic when we know that the entire global attention would be centered around what US Fed will do, should do. Now it's conjecture, it's debatable on whether they would increase interest rates in the short term or not. My sense is not, because trust me, US economy has not really healed well. But in the short term, that really is the moving part which would be a concern. Also, flows have not been that bad. I mean, given the way how markets have come down, how individual stocks have melted, flows really have been on our side, with barring 1 or 2 days when market volatility took its toll. So in general, I guess markets are simply correcting, and you can't pinpoint a finger on a particular topic. As markets go down, we tend to connect dots and find reasons. But in general, I guess the price appreciation had been so strong that a correction was always on the cards.
Well, yes, indeed. Just the meltdown in commodities that we witnessed in the session today. Hindalco was weaker. You had Sasa Sterlite, which gave way. Cairn also retracing 3% in trade. Phani, what's the approach for some of these names?
Well, commodities generally are an avoid at this point in time. One is seeing a global disinflation, and I don't think the commodities, the industrial ones especially, have seen the bottom. So from a near to medium term, they clearly are an avoid. However, from a long-term point of view, I think on days of decline, you can look at many of these stories as contrabets, but it requires a lot of patience. But for all practical purposes, from a 1 to 3 year perspective, I don't think this is the right time to buy these stocks.
Ashwini, is there hope and scope for large cap IT in the short term? Because today large cap IT stocks were strong in an otherwise very choppy market.
See, it appears the way market is positioning is that dollar strengthens, rupee goes down, hence banks remain under some sort of pressure, and IT stocks could outperform till this gets cleared up. So I think right now it's long IT, short bank type of trade, because obviously if the rupee weakens, then possibly interest rates may not come down as much as people expect or as fast as people expect. So it's that sort of defensive buying that's taking IT higher.
Phani, what's your call on IT and on the fact that some of the companies have said that Q4 revenue would either be in line or a bit disappointing. But if you just date back to what these companies had said before Q3 earnings, the numbers actually surprised the street for a positive reaction on the stocks. Could you expect the same?
Well, even if you go with the version of the companies that Q4 will be, excuse me, Q4 will be a little or will be under stress, you are still looking at about 15% growth in earnings for many of the frontline IT companies. You have all the prospects of a helpful currency because while the dollar has appreciated against all currencies on a RERR, on a REER basis, the rupee seems to be overvalued by about 25%. Now that doesn't augur well for the prospects of rupee, so expect rupee to depreciate in the near to medium term. Consider all this and also the fact that the demand seems to be pretty much stable. It is better than what it was a year back. You have all the prospects of IT outperforming. And the last piece of this puzzle is valuations. Apart from a TCS, rest all the frontline IT companies are trading at about 15 times 1 year forward. Now this is one of the cheapest basket among the entire Sensex earnings. So I don't see any reason why investors should be worried about either the growth challenges or the valuations because both of them seem to be falling in place. So it seems just ripe for this sector to outperform and take the mantle of leadership for the next few months or so.
Gentlemen, stay with us. Let's take a quick break and let's also hear out some thoughts from Samir Arora of Helios Capital, who believes that this year pro-corporate budget will not have an impact on earnings. In fact, the same set of sectors which did last year are likely to outperform, which is IT and pharma and private banks, because as of now, there is a lot of visibility there.
Talking particularly about results, I think this budget in that sense has ensured that you will have more of the same in terms of good sectors doing well and bad sectors, as in people who were doing badly in 2014, still doing badly. Positives were all the sectors, fortunately, which we used to like, which was private sector banned because of the technical issue of this FDI, FII combo, or the NBFCs, which generally are otherwise good, but also got help that now you can have the bankruptcy law applied, they can use it. Thirdly, the high tax-paying companies, which are basically consumer and pharma and all, where over time, if we believe that tax rates will be really reduced, which right now is just a good plan, whatever they say, from 30 to 25, but if they remove exemptions and incentives, then it means that the current high tax-paying companies will pay less and currently low-tax companies will have to pay more. We did that ourselves, as I said, in a few railway stocks, defining those stocks as good companies, bad cycles. Now what happens, the same thing happened in road also. But we are not able to define beyond one company, good company, bad cycle. We define those companies as bad companies, bad cycle. So what to do? So we are not buying those even though their earnings may change.
Welcome back. You're still watching Markets Tomorrow right here on ET Now. Let's get you a quick list of stocks to watch out for in tomorrow's session. Gargi Parikh joins us with just that. Gargi, what is it that you have lined up for our viewers?
Well, two buy recommendations coming in from dealers. The first one is Gujarat Fluoro as well as the Sun Pharma. Let's talk about Gujarat Fluoro first. There are buy recommendations coming in just ahead of the Inox Wind IPO, and there could be some buying that we could expect in the next couple of trading sessions. For Sun Pharma, there is a buzz that there could be FI accumulation coming into the stock. Remember, there have been two very important news items that have come in over the last few trading sessions. The Halol plant getting the US FDA approval for some drug coming in. There are a few other positives that we've seen for Sun Pharma, especially after the Sun Pharma Ranbaxy merger that had been approved by the Punjab High Court. So all of that will be positive for the counter going forward.
Right, Gargi, thanks a lot for that. Ashwini, how do you propose one should trade tomorrow morning?
So again, stick with basically pharma and certain other stocks which are doing well. And meanwhile, you will get intraday declines and rallies. So Wockhardt is a buy with a stop of 1850, target of 1940. Siemens is a sell with a stop of 1410, target of 1340. And Kotak Mahindra is a sell with a stop of 1325, target of 1260.
Funny, a house view or a high conviction idea?
Well, would not be able to talk on stocks, Tanveer, but pharma and IT look good, not just for a couple of weeks, but maybe a couple of months. And one should continue to hold on to the financial services part of the portfolio.
Thanks, Funny, for that. Thanks, Ashni, for your ideas as well. That's Time Out on Markets Tomorrow. From Nikunj and myself, thanks very much for watching the show. But we leave you with the promise of coming back tomorrow morning at 8 a.m. to track the markets for you as always.